The House Ways and Means Committee may release a draft of the $3.5 trillion social policy bill as early as next week, including the tax hikes needed to pay for it. That's left wealthy taxpayers scrambling to do proactive planning, especially to avoid a possible doubling of the top capital gains tax rate to 39.6%, up from 20%, which could be retroactive to the date legislation is introduced. For folks who need to raise cash or reposition assets, it may be prudent to sell those assets in the next few days, warned CPA Bob Keebler of Green Bay, Wisconsin in an alert to tax and financial professionals on Leimberg Services. It's not just a capital gains tax hike that's at stake. There are more than half a dozen tax hikes that could be used as revenue raisers in the bill. The Democrats' social policy goals are ambitious: paid family and medical leave, expanding Medicare to include dental, vision and hearing benefits, extending the enhanced child tax credit as well as provisions to address climate change. Who would pay for all of this? The Democrats' budget blueprint promises no new taxes on families making less than $400,000 per year, small business and family farms. It calls for tax fairness for high-income individuals. You're going to see a tax increase, no doubt, says Pamela Lucina, head of the trust and advisory practice for Northern Trust. Everything is sort of fair game. A Northern Trust white paper, navigating possible tax policy changes, hedges the likelihood of various tax hikes in play. It puts an increase in the top individual income tax rate and a small increase in the capital gains tax rate, to 25% or 30%, in the most likely category. We're acting as if all of these could be part of the final law as they negotiate and search for revenue, she says. So the thinking is that tax hikes are going to happen, it's just a matter of which ones and when. It's like picking the NCAA bracket, says Keebler. You don't know what the final deal's going to look like when it's carved at 3 in the morning. Here's a laundry list at what could be coming. Individual income tax hike. The top individual income tax rate could jump from 37% to 39.6% for those making more than $400,000 a year. Planning tips: accelerate income. Consider Roth IRA conversions. Higher capital gains tax rate. An administration proposal would double the top tax rate from 20% to 39.6% on long-term capital gains and qualified dividends. Lucino says that Northern Trust predicts a smaller increase, with a new top rate of 25% or 30% more likely. She's already been working through the calculus with clients to figure out whether they should or shouldn't sell assets. Taxes are a factor, but not the only factor, she says. One client is selling a food distribution business, and rather than selling outright, he's selling it on an installment basis, which allows him to defer the capital gains.